The perhaps biggest and dumbest move I've seen, biggest value destruction and dumbest move that I've seen in trucking in terms of a public company in so many years, and there's been a lot of them,
Yeah.
is the Ford Air Omni merger that lost at one point 90% of the shareholder value. This thing was trading at 128. I think it got down to 13. By the way, I was looking at it and thinking, man, this is a great acquisition target for somebody. But it has, I think now there are some buy-side conversations about some activist investors that are back in the stock. What the hell happened?
Well, I'm trying to be politically correct here, but they bought a freight forwarding company at 18 times COVID-fueled EBITDA and used debt and didn't ask their shareholders to do it. So that's not going to go over well.
They also bought, Ford Air's business model, because I ran a business that competed against them, 20 years ago, was basically doing wholesale airport-to-airport transportation. That was the core part of the business. They've now gone into dray and other things. But one of the rules about Ford Air was they would never go and become a forwarder because their customers were forwarders. Now they're competing against the forwarders. What was management's justification for that transaction?
Well, I think I've thought about that a lot, and you and I have talked about the stock. Look, let me say, I think the stock is incredibly undervalued here. It's blood in the streets kind of sentiment around it, and if they don't break that covenant, then I think the stock has a tremendous...
What covenant is that?
Well, everyone on the sell side and on the buy side is concerned. The covenant that came with the Omni transaction, it's basically their net debt is measured by the banks who lent it to their last 12 months adjusted EBITDA. And the problem was, that's rolling last 12 months EBITDA, and Omni's earnings are falling off a cliff as we speak. And so the numerator stays the same and the denominator keeps falling. And so basically it's come to if they can't increase EBITDA 130% quarter over quarter versus Q1, then they're going to break their covenants. Now, that doesn't mean they're going to go bankrupt, but it's dicey because as an investor, at the fund luckily I pull the trigger myself now and I can do it, and I tried once on Forward Air, and then the stock is just so volatile. And at this point, I think they struggle with who are the natural owners of the business because, just having spent a whole career on the buy side, it's very difficult as an analyst to go to your boss and say, hey, I want to pitch a stock down 95% that's about to break their covenant, and is going to get debt downgrades and has a whole new leadership team. And so, to your point though on, the acquisition and what they were thinking, I think what happened was they have this great expedited LTL business, and you ran U.S. Expresses like that. And the problem is with that, and you would know more than I, but they basically move, concert type event stuff, just like this, and healthcare type stuff, and it's a finite market, right? And so I think they had a great high margin, high return on invested capital business, but the public markets want you to grow, and so, it was probably better as a private company, that the shareholders could get the money back.
Just a cash flow machine.
Yeah, exactly.
It wasn't just entertainment equipment and shows.
No. When they talk about, they really talk about, that type of business.
A lot
started out airport to airport though. Right?
Yeah, they're doing a lot of international air freight, like Lufthansa or El Al, and ultimately is providing road feeder services.
Yeah.
Very small niche, a relatively small niche in the world of logistics. But you're right. I think it was, a buyout candidate would have been better than diversification, if you will, if that was sort of seemed like it was crazy. C.H. Robinson, we had someone this morning from C.H. Robinson, has been probably is among, it's certainly one of the most important stocks in our industry. It has also had a crazy ride in the last couple of years. What is the story there?
So you're starting off hot, talking about
I
all the
always start off hot.
I wouldn't expect anything less. Craig's wants us to talk about the most controversial companies in the space.
I don't want to talk about the boring stuff.
Yeah, no, of course. So
juice.
C.H. Robinson has had, the highest short interest in any major transportation company for a long time, and the stock has recently popped. They hired a new CEO. To be candid, I haven't, I know a lot about it, but I'm not as close to it as I normally am. With C.H. Robinson, I think you talked about it during your State of the Freight yesterday. The freight brokerage industry 20 years ago, when some of our people in Chattanooga started those brokerages, it was a tremendous growth business. And I think you talked about the market share of brokers as a share of the overall trucking market tripled in 20 years, right? And C.H. Robinson was the 800-pound gorilla leading that charge. And I think what happened was, the market matured. And, now that you have 20%, and the other thing, to your point, I agreed with you and Zach that the brokers help keep all these owner-operators in the market longer than they otherwise would. And one thing I would add on, a lot of those trailer pools and power only that some of the public carriers have brought to the market are, that's a really good extra high margin business for them in a good market, but it might be cannibalizing them. But I think the other thing was so much of that private capital flowed into the freight brokerage market, and so all of that growth came from, let's call it I call it SMID cap and investing, kind of small and medium cap freight brokerages. So call it the 100 million to $1 billion kind of gross revenue. There was, I don't know how many dozens of those that I think and then there were the two big dogs that were very well funded in Uber Freight and Convoy, who were allowed to lose money, and they weren't. And so I think it was and then, we're going through a very, very big down market, and so I think they've just stalled. And the way to grow that's left for them is to cut headcount and expenses. Now, don't get me wrong, they will certainly grow cyclically in the next upcycle, which we can talk about, which I think we may be upon it. But it's just. Did you see that video with Cam Newton? I think
I
Gunnar
did,
posted
yeah.
it.
Freight is recession proof.
He said C.H. Robinson's got $20 billion in revenue and nobody knows who they are. So I think they're just big, and it's a size problem as well.
I mean, I would love to have Cam come to one of our conferences, because I would love for him to talk about, give his take on it. I mean, it's Dooner found the video, at least he found it for me, and it was interesting how he was talking about it. It is recession-proof, because anyone who's in our business knows. But when you're talking to Wall Street investors that don't know the space very well, and did they believe that this industry is recession-proof? That maybe not the regular investors that are in it, because there's not a ton of regular investors in it, right? Yeah. But the ones that are sort of outside of this industry, do they look at this as, hey, this is an industry that's always growing, that's always needed? Do they see it that way, or are they well aware of the cyclicality of the business?
Well, I could talk about this for hours, because part of my job is to raise money. For a new fund, you have to find investors, and so I spend a lot of my time doing that and pitching. And by the way, I do anything freight or passengers globally all over the world, so it's pretty varied. But I think in general, and let's talk institutional allocators here, not high net worth individuals, I think it's beneficial for me. First of all, I run to my knowledge, only pure play fund on transportation, maybe in the world. There are some ocean shipping dedicated funds and such, but they know it's cyclical. I think it scares them. On the positive side, I think with COVID and it being front of mind and so important to the huge inflation that we've had for the first 40 times, I can talk to almost anyone. They want to talk to me because I've never seen that before, right? Like, in other words, for them to get pitched a tech fund, a large cap growth tech fund, I mean, they get thousands a year. And so it starts that way. There's usually a lack of knowledge, but a curiosity. And I think the one thing that I have to sell, and by the way, I run a long short fund, and I think it's naturally conducive to investing, because these are deep cyclicals. As I often have to tell people, the Old Dominions of the world, the 100 baggers that never go down, those are very, very rare, as you know, in our space. And so, look, you have to embrace that cyclicality, and I love it because, and if you're long short, I'll just give you an example. I don't know if probably our audience knows, but the average transport stock is down like 15% year to date. Meanwhile, the S&P is up 12, NVIDIA makes a new high every day, it adds 500 billion in market cap. It's really hard to be a long-only transportation investor because who wants to invest in something that's down 15% when, arguably the US stock market is approaching a bubble? That's a hard sell. And so I guess for me, I try to sell it in a positive way. I don't enjoy the fact that truck drivers lose their jobs and have to, as you guys talked about yesterday, but it's a fact of life. And so for me, long short is when you're doing cyclicals, what I do is I try to buy up cycles, right, or the bottom of the market on the long side and do the vice versa on the short. And so what's beneficial for me is every single day recently, every single transport, it's the biggest the Dow Jones transports have underperformed relative to the Dow and the S&P in like 20 years. That's really hard to deploy capital into a market where those stocks are the only stocks in the market down every day, right? It's just mentally hard to do. So the long short makes it easier for me. And I would tell you, I'm very, very positive. I know probably so much of the talk at this conference has been how depressing and terrible of a market it is. But I think if you invest in anything in surface transportation, you're going to make a lot of money over the next couple of years. That's where I'm putting my money and my investors' money. So I think that's the good news. But yes, they're scared of these companies in many cases, and I have to explain to them why a long-short kind of approach kind of mutes the inherent volatility and earnings cyclicality in a good way. Like our fund is up this year despite the markets being down. So there are ways to get around it. And the last thing I would say, because I don't want to keep droning on, but that's why I designed the fund to invest in other things besides just truckload, which I know that's because it's tough. If you have to run a long-only trucking fund, it would be a tough time the last 2.5 years. I laugh that I probably picked the worst time in history to start a fund. I started in Q4 of 2021, and you don't get a second chance at starting a hedge fund. It's not like a VC business where failure is lauded and, oh, good job, Craig, your business failed. Here, let's give you some more capital. It's exactly the opposite. So it's been both fun and a challenge, and it's exciting because finally we're going to get an up market here. And it may be bouncing along the bottom lower for longer, given all the huge capacity. But
yeah, you and Dave Clark may have had the most unfortunate timing in this space.
Yeah.
Although I think his may have been more unfortunate. He really timed the top. I mean, that felt like the top.
Yeah, well, I mean, just think about some math, right? As I was coming in here. So Craig taught me most of everything I know about transportation. And, the average trucking company probably had an 85 or a 90 OR on booming revenue and volumes and rates off the
During
chart.
COVID.
During COVID. I mean, you look at that, the separation between 2020 and 2021 relative to 19, where were all those lines at the bottom, it's enormous, right? And so they were printing money. And, just think about it. This is the way I think about the world and why you have to, at the very least, you're kind of at the trying to get blood out of a stone stage if you're shorting trucking, because it's basically $1 trillion market in the US, half and half private fleet and for hire. And ORs have blown out by, I don't know, at least 1,000 basis points to the negative. The best companies in the market are putting up 95 to 100 ORs or more. Like you mentioned, Heartland, 106. They did like an 80. So just using some math, you have a $500 billion for-hire industry that's lost, 50, 65 billion in profits.
In a booming economy.
In a booming economy, and that's the other thing that's been so hard for transportation, and I think this is COVID influenced, is normally you have some synchronization, right? Where the goods economy, which is, consumer spending is 2/3 of the US economy. Like this time, you have the worst of both worlds. It's a perfect negative storm. You're coming down the other side of Mount Everest, as I call it, on the COVID-fueled kind of freight bubble. And your volumes at best are flat for most people, and maybe up a little bit, according to y'all, but it's been bad. Pricing has collapsed, and every one of your input costs, from equipment to drivers to insurance to diesel, you name it, is up 50%. So, the winners in the market right now, for example, the Magnificent Seven, why are those stocks up huge? And I think they're very fully or overvalued, by the way, but those companies don't suffer from stagflation. And right now, transportation is a horrible place to be. You got no pricing power, no volume, and your costs are up 50%. Now,
You're the second most depressing person I've had today. Jordan, really.
No, I'm positive because think about it this way. Let me spin it positive. Knight Swift, I think, earned, which I own, by the way, and I'm positive on. They earned like $6 in 2022 or the peak, and I have too many companies in my head, but they're going to earn about $1 this year. Okay, think about that. What's 1 divided by 6? It's like 15%, right? Yeah. Earnings collapsed by 85%, right? And so I think there are nuanced ways to look at it. You could say the normalized earnings are 3, right?
I mean, there's 2 big transactions. One was they shut the insurance company down.
That really hurt them. That was probably $1 in EPS.
US Express.
And then US Express, they were probably a year too early, but they arguably, that stock had gone, as you well know, that stock had gone down a lot. So look, I think those earnings are going to go back up towards 6.
As the market returns.
Yeah, I mean, so I think, we can talk about, we've got a couple minutes left, but we can, to me, you asked, so when you talk to a sell side or particularly analyst on transportation, they're very safe and they're scared for the most part, right? So you say, what do you like? And every time I talk to these people, well, I like rails and LTLs. Why? Because they're the only things that aren't collapsing, right? And LTL is overcrowded, in my opinion, but I like truckload the best because, what are you going to do? I would just put it simply, I think $1.70 on spot rates, right? The cost to run a mile is, I don't know, for 95% of the trucking universe is above that. So you're really betting on irrationality indefinitely if you're short trucking, and at the same time, the stocks are. Most of the stocks in the space are down, I don't know, 50% at least, peak to trough. And in theory, if their balance sheets are okay, someone like me will value them on normalized earnings because we obviously know 2024 earnings are not going to be, it's not representative of
what is normal though? I mean, like you say that, but we're in a different, we've talked a lot about, like the rules of trucking are the same, right?
Yeah.
But it strikes me that the asset-based carriers, we're inevitably going to lose a lot of their market share to freight brokerage and the small players. Yeah. But is that market truly going to come back for those large asset carriers? Or we've seen a complete capitulation where now the independent brokers and the independent operators are the ones that are going to be the predominant players?
Well, now you're the one with the depressing question. Look,
no, I'm asking the question.
No, I think absolutely, yes. I mean, look, it's if you look at the last, call it year and a half, 2 years, these stocks are down a lot. Why? They're all differentiated in some ways, and I could tell you at length why, but they don't have enough goods to haul. And by the way, they get paid by the mile, then they don't get paid by units. So they're growing, even though the US economy is growing nominally in dollars, inflation's high. And so the number of items going in that truck. And then the other reason I'm so positive in the market, speaking of the public carriers, is, I saw a chart from Bank of America Merrill Lynch. It's great. It's for the last 50 years. And they took all of the days of sales of inventory on hand for all of the non-financial companies in the US. And inventories are down about 10, 15% year over year. And it looks just like 08 and 09. So I do think when inflation tames and perhaps the Fed cuts, that will boost the housing market. It will increase consumer spending, and you'll get a double bang for your buck because there will be some sort of restocking as well that we've all been talking and guessing when it will happen. It's kind of like, we used to joke that this is like the third back half recovery, in a row, like the third year in a row. These CEOs have been saying, well, when it comes to the back half, it's going to be good.
Yeah, second half, right? It's always the next 6 months, and that's a pretty universal answer. Do you track the industrial REITs like Prologis? Is that in your coverage? Or?
It is. Anything that's a freight or passenger oriented or a supplier.
How do you feel about, like, from an industrial REIT, industrial real estate?
So it's not a strong suit at all for me, I guess what I would say is I really pay attention to it, right? I try to connect the dots. So you see West Coast imports have been up mid-teens year over year for the last like 12 months. So I try to connect those dots. For example, like if I see stuff coming in on the West Coast, is that going to benefit JB Hunt with their transcon intermodal and so forth, and find who's going to benefit from, I look at all these data points, including FreightWaves, and I figure out, okay, where's the puck going? Allocate capital to those that are going to benefit, and then vice versa.
And take capital away from those that
or short them.
or not.
Yeah.
Which is effectively slightly different thing.
It's a little bit different, but it mutes the volatility, because these are high beta stocks. Most of these betas are, I don't know, if the market's up 1%, they might be up or down 3%.
So Seth, your take on the cycle, sort of closing thoughts, where are we at in terms of the freight cycle from the things that you're seeing, the things that you're reading? We joke about the fact that it's the next half, but this has been going on a while.
Yeah, look, so I was a consumer analyst before I was in transportation, and you do these things called comps, right? Where you got the 1-year comp, the 2-year comp, the 3-year stack comp, and I think the comparisons are getting really easy in freight. The volumes, yes, they're up. I think you quoted 13% in the last 5 years yesterday.
2019, I think.
Yeah. So, look, I think volumes will recover. The U.S. consumer, myself included, is hurting. I have a family of 5, like to eat out or do anything. They say prices are up 20%, but it feels more like 50 to 100 for everything that I buy. So, look, I think, and then the service economy unwound that huge. So you've got restocking, you've got ORs that have been crushed down to 100. Like, why are you going to stay in the market, right? If you've got 105 OR, why do you want to run a trucking business?
I don't think you do.
Right, so I think the worst case, and just to keep it short, is bouncing along the bottom and lower for longer and dead money if you're an investor in the space. So, because I just think that the comps get so easy and you've got restocking and then you've got the Fed. The Fed cannot raise interest rates anymore.
Do you think Jay Powell recognizes that?
The politicians won't allow a recession. Our debt is out of control, all that sort of thing. They cannot raise rates anymore. If they do, the stock market's going to crash. So, I think all of that setting up just looks, and then you got to, the pendulum always goes too far. This is one thing in investing, like stocks and companies, cyclical earnings, they go way farther than you can possibly dream, right? On the upside and on the downside. And so I think the pendulum's going to come back to, something resembling balance. And I realize that, to your point, there hasn't been a normal market at all for the last 5 years. So.
Yeah, lots of distortions. Well, Seth, really appreciate it. How can folks get in touch with you? How can folks, if they like to?
Oh, sure. I'm on LinkedIn. That's the primary area. I'm not allowed to really advertise my fund because it's for, accredited investors, but we're going to get a website. We're about 2.5 years old. We're growing, thanks to Craig, and so we'll look me up on LinkedIn and reach out, DM me, and I'll get back to you.
Sounds great. Thank you so much.
Thanks, Craig.